On August 20th, 2026, the market delivered a sharp correction to a major American retailer for delivering exactly what it had promised. Advance Auto Parts had spent months executing a massive turnaround strategy. They cut overhead and consolidated its supply chain, shrinking its distribution network from 40 warehouses down to 15. By August, their profit margins were finally moving higher, but the market ignored the rising margins. The stock plummeted 22%. As Advance Auto Parts sank, Walmart's stock also came under duress, pulling the broader U.S. market lower. Seeing the world's largest retailer wobble alongside an auto parts supplier makes the case that this isn't just one company's bad quarter. It's a sign of a broader pullback in consumer spending. This anxiety moved directly into the bond market. Yields reacted as investors began pricing in the risk of a sustained slowdown in retail activity. When equities drop, retail data slows, and bond yields move, it suggests the slowdown is spreading across completely different layers of the economy. While American retailers struggle with current demand, the tech sector is focused on a different horizon. In Hangzhou, China, Alibaba is moving aggressively to pivot its entire business model. In its first fiscal quarter of 2026, Alibaba reported that its net profit had dropped by 76%. That drop wasn't a lack of sales, but a massive surge in spending. Capital expenditure spiked 75%, reaching nearly 68 billion yuan. They are trading current profits for future infrastructure, flowing that cash into high-end AI models and specialized hardware. To maintain this pace, Alibaba is even selling off profitable parts of its current business, reaching a deal to divest its video game studio. Alibaba is betting that dominance in a high-tech future is worth sacrificing its current retail profits. The final view of this economy comes from Jackson Hole, Wyoming, at the annual Economic Policy Symposium. This is where central bankers and academics meet to set the policies that govern the cost of borrowing for every person and corporation we've discussed. Despite the signs of consumer fatigue at the register, the official theme of the 2026 symposium was Financial Innovation, Implications for Payments and Policy. While the daily economy shows signs of a slowdown, the people managing it are focused on engineering the next generation of digital financial systems. This has created a split-screen economy. On one side, companies like Advance Auto Parts and Walmart are seeing clear evidence that drivers can no longer afford routine car parts. On the other side, companies and policymakers are spending trillions to build out the future of AI and digital payments. This suggests a widening gap between corporate ambitions for new technology and the actual purchasing power of the people expected to eventually use it. The data from late 2026 suggests that traditional metrics are being overshadowed by a new reality: the growing distance between high-level innovation and the financial health of the average consumer.